Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Mark Hanf of Pacific Private Money. Nam Phan is off today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during the show. Certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is miscellaneous trivia. Mark, you haven't been with us for a while. I know you got a lot of good stuff to talk about.
Well, I try to get on here at least once a month, and I do appreciate that a lot of our clients are weekly listeners.
Yeah.
And I know they're accustomed to hearing you and Nam on a fairly regular basis, plus our guest hosts that appear. And so anyway, today I'm back, and I've got some good stuff. We're going into the weekend after the July 4th. Holiday, and it's going to be a heat wave, I hear. So we may not be needing those Tan Bella certificates at least this weekend.
But always nice that they want to give them away to winners.
That's right. But to kind of sum up what's happening, in the real estate market, since that's what we talk about, the preponderance of our conversations at the Best of Investing each week are about the real estate market and real estate related investments and what's happening and what are the opportunities. And so here's a headline that pretty much kind of sums it up. And this is a nationwide real estate headline. The typical home sold for its highest price on record, at its fastest pace on record, and for 2.3% above list price, the largest sale premium on record.
Wow.
Now, that about sums it up. Now, 2.3%, I mean, that's in San Francisco, it's not unusual to see a home go for 25% above asking. So, but, as national averages go, the rest of the country is starting to experience what we have been experiencing in California off and on for decades. I mean, it was, we started to see real estate inflation in California right around the 70s. I remember when the first home started selling for $100,000. Now that same home is selling for well over $1 million.
Well, let me ask you, how much of this has to do with, you think, people migrating from California to the other states?
Well, there's certainly a lot of blame going on in Texas, Arizona, and Idaho, to name 3 out of probably half a dozen popular relocation points for Californians who are moving. And I've been to Dallas, and I've been out to Scottsdale, Arizona, and I've been to a number of these towns that have been talking about how prices have been going up quite a bit, and how a lot of Californians are going, wow, real estate's on sale here.
But then if they find out you're from California, they get a little upset.
But that's anecdotal. I don't have any, but that's just talking to all the Uber drivers that I talk to. They don't hate Californians, because a lot of them own homes, and they're seeing their appreciation go up. But bottom line is, it's funny because there are, I did see a headline that the U.S. housing market is losing a little bit of steam as we get into the summer here, and they cite that pending sales are continuing to decrease. As the number of homes for sale are slowly growing. So pending home sales are homes that are in contract. And if there's fewer homes in contract, and with a typical summer, and we're coming out of the pandemic, you would expect more and more homes to go on the market, and that's what's happening. But I don't really know that I would call that a cooling trend, because home prices are still rising. Homes are selling in fewer days than ever before. And more homes than ever are selling above list price. So check this out. So I got to find this one. A record 55% of homes sold above their list price. That's up from 26% a year ago. Wow. So more than double. I mean, these are all unprecedented numbers. Yeah. Not so unprecedented for California, and particularly for the Bay Area, but nationwide, this is just unbelievable. Median home price up 23% year over year. Asking prices up 14%. And so it's, basically demand is outstripping supply. Yeah. not enough homeowners are putting their homes on the market yet to accommodate the increase in demand. So we've seen a surge in demand, but supply is still constrained because the majority of homeowners are boomers or older.
Ah,
And because of that, you've got a situation where a lot of boomers are still not quite ready to take off their masks and go house hunting. And just the whole stress of moving is difficult in a market where competition is so fierce.
okay.
So what I hear a lot from realtors who have clients who want to move is that they're afraid to put their home on the market now because they're afraid it's going to sell in 5 minutes and they're going to be homeless.
Exactly. We're going to continue on. We get back on talking about that. Our
Nice.
first trivia question, our commercial break, we're talking miscellaneous trivia here is, what color is the 3-ball in pool? Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. And by the way, I don't know if you've, we had a sponsor on a couple of weeks ago, Palio Restaurant in San Francisco. I finally decided to go there, and I could not believe how awesome the food was. Spectacular. They spent a lot of money in the place, and food was excellent. Very reasonably priced too. Could not say enough about it. Palio Restaurant in San Francisco. Check them out. All right, stay with us. The Best of Investing. We'll be right back. Welcome back to the Best of Investing. I'm Edward Brown, along with Mark Hanf of Pacific Private Money. First trivia question: what color is the 3-ball in pool?
And I was going to run downstairs and check it out on my pool table, but wasn't enough time on the commercial break.
Yeah. Answer though.
I don't. Green.
That's the 6-ball. And the 14. Red.
Oh,
Yeah, the red ball. Yes, same as the
How
11
much
ball.
I know.
All right. So Mark, you were talking about how, just before we cut the break, how a lot of people are concerned about putting their house on the market because they're concerned it'll sell so fast and they won't be able to buy something quickly.
Well, the housing market, the way it stands today, what's really happening is we've got a surge in demand. People want to move. People who live in condos want to move into a single family residence. People living in the city want to move into suburbs. A certain number of people living in California who've decided it's too expensive here. I want to move to Austin or Scottsdale or Boise, Idaho, or someplace in Oregon or Washington. You know, there's just a lot of demand, pent-up demand, I might add, no thanks to the pandemic. But the supply hasn't caught up. So, and it's not just the fact that we're not building homes fast enough and we're not building enough homes in the markets where people want to move. But it is that a lot of existing homes, we're at the lowest rate of existing homes on the market. I don't have the percentage in front of me, but it's significantly down over averages of how many homeowners, how many existing homes would typically be come on the market in spring and summer. And that's in large part due to a couple of reasons. One being the pandemic and people not willing to, not ready yet to go through the rather arduous process of selling their home and the exposure that creates. And they're also afraid that because of the competition that they'll sell their home very, very quickly and then not have a place to move. Now you got to put yourself in storage, go find a place to rent, go move in with a relative. I mean, it's just, none of those things sound good. And so really, it's one of the reasons why our consumer bridge loan that we offer at Pacific Private Money has grown in popularity so much so that it's the best-selling loan product that we have. Just a couple of years ago, 20% of our loan volume was a consumer bridge loan. Now 60% of our loan volume is the consumer bridge loan. And what that is, it's a purchase money loan for short term that allows somebody to tap the equity in their existing home so that we can do 100% financing on their target, on their intended purchase. So what that does is it basically allows people to go buy their next home first and move later. Yeah. Whereas in the traditional way, you go to your bank and you'll tell your banker, hey, I got a down payment for my next home. Can I get can you give me a home loan? And they'll say, sure, as soon as you sell your existing home first.
Yeah.
Because no thanks to Dodd-Frank, it's difficult for most home buyers to qualify to have two home mortgages at the same time.
Yeah.
Even if you make good money, it's very, very difficult. There are DTI ratios, there are other considerations. Dodd-Frank was enacted to help protect consumers against predatory lending practices, but it's a double-edged sword. It's made bank financing much more stringent and difficult to get, and the underwriting guidelines are tougher. So we developed our consumer bridge loan shortly after Dodd-Frank. We've been doing it for about 8 years now. That allows people to basically get a loan, a short-term bridge loan that would allow them to make offers on a home that they want to buy first. And so anyway, it's a very, very popular program. For more information, go to our website at pacificprivatemoney.com or call us at 415-883-2150, especially if you're a real estate professional out there and you have clients that you could list their home if they weren't afraid that it would sell too quickly and they don't know how they're going to get their next home. So, that's, and so.
Well, let me interrupt for a second. That's just one of the benefits of your bridge loan product. The other one is to be able to compete with the all cash buyers.
It's a pretty powerful tool. And we spend a lot of time educating realtors about how powerful this tool is so that they can educate their clients.
Yeah.
Because every realtor out there probably has a potential client that if they could find them a place to move into where they can make an offer that gets accepted with the sales contingency if their existing home. And that's a tough proposition right now. That's really hard to have certain contingencies on a home offer. And so it's just, it's a great product. So, kind of getting back to, where we started the segment is, so what is this tight housing market? What does it portend for the future? What are the predictions? And well, I'll tell you one thing that is, that we're not predicting is, any kind of real estate crash or correction in the near term. And here's a headline from Housing Wire, which was one of my favorite real estate blog posts. And you've heard the term tech bros, right? It's kind of a semi-snarky way to refer to those folks in the technology industry. There's also a term for those who have continually been predicting for the last several years a crash or correction in the housing market. And those guys are referred to as crash bros. Here's the headline: pending home sales crush hopes of forbearance crash bros. So the thought was from these people who are basically bearish in nature is that as these laws preventing and forbearing against lenders foreclosing on homeowners not making their rents, or for homeowners who own rental property are not able to foreclose out or evict their tenants. A lot of those rules are relaxing and are coming to an end. Right now, it's as of September this year, that's going to come to an end. But there is this prediction among a small minority. Maybe it's more of a hopeful thinking that this is going to result in a major correction of the housing market. And, the data just isn't there. A housing crash isn't going to happen, not for those reasons. A housing crash can always happen due to anything, something woefully unexpected happening. But even if we had another upsurge in the pandemic, that's not going to cause housing prices to go down.
No.
And we saw that happen last year.
When we come back, we'll talk about how people can invest with you to take advantage of those kinds of loans that are available for investment. All right, here's our second trivia question. What religious day follows Halloween? Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Again, what religious day follows Halloween? All right, stay with us. The Best of Investing will be right back. Don't touch that dial.
See what do I got next?
All right. Welcome back to the best of investing. One more time, I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money. Second trivia question: what religious day follows Halloween? What do they call that? November 1st. What's the name of that?
Oh my goodness, you would know that. I don't.
Well, I know because I have the answers right here. It's called All Saints Day.
All
And
Saints
yes,
Day. That's right.
that's right. Want to make a mention here also for Mountain Mike's Pizza in San Rafael. Pizza the way it ought to be. Check them out. Mountain Mike's Pizza in San Rafael. Had their pizza before. It's excellent. All right. So Mark, you talked about these bridge loans, and they sound like they're pretty decent loans to make as a company. If there are people out there who are interested in investing, what opportunities do they have to participate?
So the one of our most popular loan products at Pacific Private Money, we're an alternative real estate finance provider based in Marin County. Been in business since 2008. We've done over $1 billion worth of privately funded loans. These loans are often referred to as private money, alternative, hard money, you name it. But it's basically grown to be a rather mature industry. Under Dodd-Frank, we've been regulated, and the bad apples have mostly been weeded out. And companies like Pacific Private Money are actually doing a lot of good out there, supplying capital for various types of real estate transactions, whether it's ground up construction, for those who can't seem to get bank financing, to build or rebuild their home. In the case, we still have a lot of homes that were lost to fire that were never still rebuilt. And I'm up in Santa Rosa on a regular basis, and about half of the 3,000 lots have been rebuilt to date. In fact, we've purchased a number of lots ourselves to rebuild some homes. So there's a lot going on, and bank financing is just really tough to get. So, private money is there to provide short-term purchase money bridge loans, ground up construction, fix and flip, of course, everyone's heard of those. And so the source of our capital are investors. Most of our investors happen to live right here in the Bay Area. People like to invest in their hometown, more or less, or at least certainly a lot of our investors are very comfortable that we lend primarily in California. And so we've got a number of different funds that we use for making these loans. One fund in particular, for example, one of our more recent funds, we pay 6% on a monthly basis to basically rent money from our investors on a short-term basis to be able to fund loans that we sell to third parties. We have a number of institutional investors who like to purchase our loans, and we're happy to sell them. So we use what we call the Pacific Freedom Fund. It behaves like a warehouse line of credit for us. A warehouse credit line is essentially a credit line that we are able to use to provide the funds to close escrow. And then shortly after that, we bundle a number of closed loans together and sell it to one of our institutional buying partners. And so that's one fund. And then we've got three other funds. We've got the Pacific Private Money Fund. We've been talking about that for many years now. We launched that in 2013. That one is a mixed bag of both short-term consumer bridge, some ground-up construction, and then a mixture of longer-term private money loans on, say, small balance commercial, et cetera. That fund is paying in the low 7% range, also has monthly distributions. And then we've got a couple more. We've got a fund focused on just making construction loans, mostly ground-up construction loans in California. That's our North Star Fund. That's paying right around 10% right now. We get higher fees and rates out of construction loans. And then last but not least, we have the Pacific Southwest Note Fund, a rather unique fund where we've partnered with a gentleman who for the last 30 years has perfected a business model for buying seller carryback notes in the state of Texas. And apparently that is, for those unfamiliar with that, particularly if you live in California, you don't see a lot of seller carrybacks anymore. But in Texas, there are markets where seller carryback loans are still fairly common. And the people who hold those notes oftentimes want to cash them out. and they can be purchased at a significant discount if you know how to negotiate. And our capital partner there, Mark Brown, is very, very good at negotiating these. And that pays a fixed 7.5% return secured by a very conservative, low LTV portfolio of loans. So a number of ways that we offer real estate debt secured investment opportunities that pay anywhere from 6% to 10%, and have liquidity features within 30 days to a couple of months. So it's something that's worth investigating, particularly if you believe, as we do, that the real estate market shows all signs of remaining strong for the next several years. And even when we hit the next downturn in real estate, the good news is that our loans have a relatively conservative loan to value ratio of 70% or less. And so we're trying to bake in some protection there for the next downturn. But one of the other reasons we're pretty bullish about our funds is that we tend to make short-term loans. And as we know, real estate does cycle and it does go down, but it doesn't go down quickly. It takes years for a housing market to slump as much as it did back in 2008. So again, for more information, please reach out to us. There's a lot of information on our website. We even have a little chat bot on our website, which is managed by our live person who will answer your questions, or just call us. We have someone, Andre in our office, answers the phone live from 9 to 5 every day, 5 days a week. Call us at 415-850-5555, and you can talk to me, you can talk to Nam Phan, you can talk to a number of people in our office who'd be happy to give you more information about how to invest with Pacific Private Money, or if you're curious about how our loans work and how they can help you buy your next home with a lot less pain and stress. You definitely want to check out our consumer bridge loan.
All right. When we come back, I do want to ask you a question about why your funds have different interest rates. And again, the main office number, as I understand, is 415-883-2150. Okay.
Yes. Yep. Did I give out my cell phone? Sorry. Don't call that number.
Call that number. All right. Third trivia question. On a standard computer keyboard, which vowel does not appear on the top row of letters? And no looking at your keyboard while this question's going on. You just saw it. I just saw that. Call 888-912-1190 to answer that question. Stay with us. You're listening to The Best of Investing. We'll be right back. Welcome back to The Best of Investing. Edward Brown here along with Mark Hahn. Third trivia question. On a standard computer keyboard, which vowel does not appear on the top row of letters?
U.
No. Now look at your keyboard.
Oh, okay.
What? A. That's very good.
All right.
All right. Today was not your day for trivia questions, but that's okay. All right.
I can't touch type. I have to like hunt and peck.
Yeah, I'm kind of the same way. Okay. Question for you. Why do your funds have different preferred interest rates?
Yeah. So yeah, we have 4 funds at Pacific Private Money, and they all offer different preferred rates of return. And, you know, that's by design. You know, there's a risk reward aspect to it. And that's probably really the biggest aspect of it. So for example, our least risky fund, in our opinion, would be our Pacific Freedom Fund, where we offer a 6% fixed rate of return. Followed by our Pacific Southwest Fund at 7.5%, which we feel is, again, low risk because of the low loan to value. Why is it higher than the Freedom Fund at 6? Well, it's a Texas-based fund, and we're trying to attract a different market. And outside of California, people are accustomed to earning a little bit higher return on mortgage-secured investments. So next would be the Pacific Private Money Fund. The preferred return on that is 7%. And again, that just reflects the type of, you know, mixed a mixture of short, medium, and long-term private money, hard money loans. Again, some construction, some purchase, some generic small balance commercial. And we have 65 million of assets under management in that fund. And again, it pays a 7% preferred return. Our construction loan fund, called the North Star Fund, has an 8% preferred return with a target yield of roughly 10% that we look to produce for our clients. And again, the 8% preferred return just, again, reflects the fact that construction loans, by definition, are going to be more expensive than, say, a fund that focuses on loans on existing homes. So, but it's a great fund, and it's the North Star Capital Fund is designed to help rebuild California, because we have a lot of homes that need to be built to keep pace with demand here in California. And our fund can only make a small dent in it, which is one of the reasons why the demand for capital in our North Star Fund is actually very, very high, and we're very bullish in investing in seeking more capital for that fund, so we can continue to fund more of those construction loans that come across. So a lot of different reasons. We've got details on, we've got a sheet that summarizes all 4 of our funds. And then we've got detailed executive summaries. And of course, our offering documents go over everything on how it works. The only caveat for all 4 of our funds is it does require that you be an accredited investor. Accredited means you need $1 million net worth, exclusive of your primary residence, or you make $200,000 a year or more, $300,000 if you're married. That's not our law. That's our rule. It's an SEC regulation, unfortunately. But the good news is that for many California residents and Bay Area residents, an accredited investor status is a bar that many people are able to achieve. So,
For more information, how do they get a hold of you?
don't call my cell number. Good thing it's a terrestrial radio. You can't go back and go.
Yeah, no, that's true. 415-883-2150.
415-883-2150. We're in the San Francisco Bay Area. We've been here since 2008, and we're growing like crazy at Pacific. It's just, it's a very, very popular and growing industry, the alternative real estate lending industry. We got a few minutes before our next commercial, right?
Yeah.
So I wanted to pivot over. I've got a headline here that I thought was really interesting. So Oregon is the first state that bans home buyer love letters.
Really? You're talking about where someone wants to buy a home,
right?
And they say, "Hi, I would love to buy this home because my family, blah blah blah."
Yeah.
Yeah. Really?
My wife and I bought our last home. We included, as many, if not most, home buyers do nowadays, basically a letter. It's like with a picture of your family, and who you are, and it's called a home buyer love letter. It's not really a love letter, but it can be a very schmaltzy kind of self-promotional, tear-jerking. Here's why you should sell to us. We're really nice people.
Yeah.
And we really love your house. So Oregon has banned it for fear of discrimination. And what's interesting is that this is not a new issue. This is one that's been batted around a bit. And I think California Association of Realtors was successful in defeating an earlier proposal for a similar law. But now we've got the first state that has banned.
Okay, and I'm guessing they're focusing on race.
Well, it could be. I mean, there's just a lot, again, there's a lot of reasons, and probably primarily race.
Yeah.
Let's face it. We're not further along in race relations like, we'd all like to maybe believe we are today versus 10, 15, 20, 30 years ago. We all know what's been happening.
But here's the funny thing is, if you're the seller and you're moving to another state, who do you care who you sell to?
Well, I know, but your
neighbors, you're going to care.
It's they're looking for ways to discourage silent discrimination. right?
Gotcha. Yeah. Because there may be, and it doesn't have to be race. You could have, let's say, a gay couple who says they want to buy a house, and
Absolutely.
someone says,
Yeah.
I just don't like that idea. Yeah. Yeah.
Yeah.
Okay.
I
So I kind of get it.
Yeah, I understand the logic behind it. At first, it seems funny and silly, but
So what do you do if you're not the quote a preferred race, you just include a couple of Leave It to Beaver photo type people, even
I
if
don't-
you're different.
I think if the I guess the love letters. I haven't read the law, but I'm guessing all letters. Period. That
Yeah.
an offer is to be submitted with possibly a pre-approval application, and that's it. No love letters. No trying to.
Yeah.
Um,
Tug at
convince
the
them.
heartstrings.
Yeah,
It's so funny. I mean, I actually now that we kind of gone bantered this back and forth, I understand.
Mhm.
I'm not sure if I necessarily agree with it, but I don't necessarily disagree with it either for various reasons.
One of the things that Dodd-Frank accomplished for conventional lending and bank financing is that it's as close to being blind,
Yeah.
like justice, as you're going to get. And what do I mean by that? Conventional lending is now completely numbers driven. They don't want to know who you are, what you look like, what you do, what your story is, what's the situation. They don't want to know any of that.
But they still get asked the question, what race are you? On the 1003.
That's true, and a lot of
Or-
people do not fill that out.
Yeah, which is, you can say you don't want to answer, but
The government requires it for census purposes, but it wouldn't surprise me if future loan applications eliminate
nope.
that for that very reason.
All right, we're going to come right back with some closing comments. Don't touch that dial. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money. No trivia question, but I want to make a quick mention also to the Transcendence Theater. Invites you to experience Broadway under the stars in wine country at beautiful Jack London Historic State Historic Park. Check them out. bestnightever.org. Seen the show before? It's excellent. Okay, Mark, a little bit more about bridge loans.
So we've talked, and I appreciate the opportunity to share with the audience today about our number one loan product, our consumer bridge loan, which is pretty unique in the loan industry. And it's unique because not a lot of private money loan lenders, that is, are licensed, nor do they prefer to do these consumer type loans. And there's a number of reasons, but it's costly, it's time consuming, it's more expensive than doing fix and flip and business purpose and investment purpose type loans. But we find it's a loan product that's wanted, needed, and benefits the clients who take advantage of them. And so I'm just going to read off for you a post I did recently on consumer bridge loans. And so just a short list of here are some of the many ways that our consumer bridge loan can be used to help you purchase your next home. Number one, it eliminates the need for a home buyer to sell their existing home first.
Yep.
Because we could basically give you 100% financing on the purchase price. We're going to cross-collateralize your existing home, which allows us to secure that equity you have in your existing home. And we do a little bit of math and we solve for an overall exposure of about 75% loan to value or less. And if you've got about 50% equity in your existing home, that normally allows you to qualify for a loan of about 100% of your target property purchase price. Number two, I just said that it does provide 100% of the we can provide 100% purchase financing utilizing the equity in your existing home. Number three, really important, helps buyers compete effectively against both cash buyers and those buyers who are offering a quick close or a low or no contingency offer. So again, it's really helpful because we don't have any appraisal contingencies. There's no appraisal required to qualify for our bridge loan. It allows you to buy a home now, even if you don't quite qualify for conventional financing, if you believe that within a year, you'll be able to qualify. Maybe you've got an income issue. Maybe you've got stocks that are vesting. Maybe you changed jobs recently. All of those things require you to wait to be able to qualify for conventional financing. The other thing is we are able to rescue and quickly close on a transaction that's in danger of collapsing. maybe you're in contract with a home and you've got to close by the end of the month. Clock is ticking. Your bank financing for whatever reason, and there are a lot of them that happen, gets held up. And the seller refuses to extend. He's going to keep your deposit and sell it to the next guy. What do you do? Well, we can help you. We can rescue those transactions. And we have saved a lot of hard deposits that were non-refundable, $50,000, $100,000, $150,000, depending on the size of the transaction. We've helped divorcing couples purchase a second home before their divorce is final. A bank isn't going to lend you money until your divorce is final. So if one of the spouses wants to move out, wants to move into, to buy a home to move into, how do you get financing for that? Well, our bridge loan is a perfect tool to help you do that. And then last but not least, it just unlocks the equity in your existing home, allowing you to buy your next home now. I mean, that's really the bottom line. So, and a lot of real estate professionals are still unfamiliar with this product, because when you hear the word bridge loan, that usually means like a commercial or investment loan.
Oh yeah.
Call ours the consumer bridge loan. It's a very unique consumer product, short term, no prepayment penalty. Call us for more information. PacificPrivateMoney.com, 415-883-2150.
All right, we're going to cut out. Here's our thoughts for the day. What does a clock do when it's hungry?
Moo.
No, it goes back for seconds. It goes back 4 seconds. Okay. And delighted to say I finally got a new job installing mirrors. Nothing fancy, but it was something I could always see myself doing. I got to love that. All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.